What's going on, guys? Welcome to another YouTube video here at the Millionaires Meta Forum. My name is Velas. I am a futures trader and options trader. Today, I'm going to be going over the trades that we took and my analysis and how I interpreted the day. So the first thing I'm going to share with you guys is the Discord here. So today in the Discord, I said strive to be a sniper. Great snipers must undergo a high level of training to acquire important skills, including land navigation, shooting skills, stalking, and range estimation. Helpful personal traits for snipers include stress tolerance, emotional stability, and razor-sharp focus. They have the same qualities of a great trader. Be particular. Heads are small and they move around a lot. They aren't a reliable target. Instead, snipers usually aim for something they'll have a better chance of hitting. If you did miss your target, his first reaction is probably to seek cover. The market is your battlefield. While other troops run out and get shot, you will stand back and wait patiently. Eye everything up. Calculate. In other words, while others are placing positions and being impatient, and trying to juice the markets, the battlefield is no place for stupidity and impatience. The market always has a plan and an execution phase against all but some. Stupidity lays where opportunity awaits. Well, not really. You're bait. It's a trap. Ever see a bull flag and you get in long? It goes up a bit, then drops hard. You may be saying that was a great opportunity. How did I fail? Sometimes clear opportunity is evil opportunity. Most think, the 99%, that the success of trading is a result of how well you mark out your charts. In fact, it's not at all. You can dress up the devil, but that does not mean it is beautiful. No, sir. All right, guys. So let's get into the charts here. So today, we had ES, straight out at the open, we had a demand zone here, right? And then, guess what we had here? We had structure here. We broke this structure right here. Let's mark that up. You guys could probably barely see that. So let's make this purple. So we broke this structure here straight at around 10 o'clock. But we'll get to that in just a minute. This is where we opened the 9:30 candle on the 5-minute time frame on ES. We opened up very indecisive, and we came down and hit this demand zone. Now, straight off of this demand zone, we hit that liquidity, and we started coming up here. Now, at 10 o'clock, we broke this structure, creating a fair value gap. Let me get rid of this. Creating a fair value gap right here, right? Now, I got in short at the close of this candle right here at the top. A lot of you guys were wondering. Now, this wasn't a resistance. This was the high at the time that this was being taken. A lot of you guys were wondering, how did I know that it was going to come down there? I didn't know for sure. There's nothing that I can know for sure, right? The only thing I can know for sure is my risk and my reward. That is completely it. But I can make assumptions. I can use probability to weigh out the odds. You understand that? And that's pretty much all I can do there. So, with that being said, I got in short. My price target was right down here at 5645. We took out our profit, and we left the trade as soon as our price target got hit. Now, I want you to keep in mind here that sellers came through and broke through a very, very important fair value gap start of the day. So there it becomes an inverse fair value gap. Now, due to that break of structure there, we created another fair value gap right above that one. So straight there, you see that we broke through that inverse fair value gap, right? And then look, we come into this fair value gap, and knowing the strength of sellers here and the weakness of buyers and interest in continuation there wasn't really any at all. That's why I got into that short position. Now, with that being said, you could have gotten into a short position and shorted this thing with a price targeted demand. Why could you have done that? Watch how perfect this aligns. What do we have down here? we have the low of the day. So I'm going to take a Fibonacci, and I'm going to run this all the way up to the high here. Bang. Run that all the way up to the high there. Now let's zoom in a bit here. What do you guys see? Check this out. Look, we have an equilibrium right here, and this thing bounced right at equilibrium. Look, it's the 50% on the Fibonacci retracement. So that was double confirmation that that was a great price target, because usually in short range days like today, not the whole day, because you could see this, we had a huge move up, right at around 11:45 it started, and straight off this demand zone we just kept continuing upwards. But that's besides the point here. Check this out. I called out that if you were to get in short here at this fair value gap, this would be your price target, and it would be a perfect price target. And in that case, it came all the way down, and what did you have here? You had an indecisive candle. You bounced off 50% equilibrium, which you have hit, and you bounced off of a demand zone, in which case we had bounced here and ran all the way up and created a high straight off the open. So with all that being said, let's go down here and let's create more confirmation for our trade that we're about to execute. We come down here and look at this indecisive candle at that close. You've got a lot of volume here on that indecisive candle. What does an indecisive candle signify? It could signify a lot of things, but mainly its main signal is either a reversal. You've also got indecision there between buyers and sellers, and usually when I see a slowing of volume coming into that demand zone and then a lot of buying coming out of that demand zone, right here, that slowing of sell volume was a scare. It was a fear factor that you needed to take into account to the sell side. And with knowing all of this and knowing that volume peaked here more than it did, green volume more than it did anywhere around here on this drop, that showed me that the interest was in the upside. Do you guys see that? Do you guys see how I'm really, weighing things out and stuff like that? So that right there, straight off demand, would have been a beautiful trade as well. Now, you may be asking yourself, did I take that trade? I did not take this trade. Why didn't I take this trade? I was sticking to the plan. I was sticking to my plan, and this is not in my plan book. And if I go against the plan, then that just knocks away all the progress I've had over the years, right? If I get in the habit of not going according to my plan, I'm going to do it. It's going to become a habit, and it's going to become a bad habit, right? It could have been a good one today because we could have caught that move up, but eventually it will turn against you, and it will turn into a very, very bad habit that you completely lost yourself over. Now, I want to, tell you all something that I had mentioned in the stream, and I think it's very, very helpful to a lot of you, because I've gotten a message personally from a lot of you saying that was very helpful and that was a great way of looking at it. A lot of you guys don't journal. Now, I highly advise all of you to journal throughout your trading day. Why will that help? Why will journaling after your trading day help? Because guess what? After about 2 weeks to a month, you can go ahead and you can go on to weighing out your average wins and losses and your average trades that you take on a daily basis. And with all that information, you can go to your drawing board and you can start doing calculations. Now, what do those calculations consist of? Those calculations are going to consist of, all right, well, if I take 2 winning trades, according to, my journal, and I take 2 losing trades on average out of those 4 trades, if I want to come out green, my risk to rewards my risk has got to be shorter than my reward, by times 3, right? And what that's going to allow you to do is always, almost always come out of the day green, whether you take, any losses at all. You guys understand that? So, and also with journaling, you're able to, see on average your price point target, your risk, to reward, and you get to really do calculations on how you can almost always come out green and what you can afford to lose versus how much you're going to gain. Do you guys see that? So journaling is always going to help. A lot of people don't see the point in it. A lot of people don't even consider it. They just open up their chart every single morning, and they just go about, taking trades. Oh, I see this here. Here's a bull flag. I'm going to get into some longs. No, that is not the way to do it, right? You've got to have a fucking strict plan, and if you go off of that plan, you're going to be just like everyone else. You're going to be just like everyone else, and you do not want to be everyone else. That's the 99%. Those are the people that get into trading, and in about 3 to 6 short months, they quit. right? Because they lose themselves in the process, and you do not want to do that. You do not want to lose yourself in the process. And how do you lose yourself in the process? Or how do you don't lose yourself in the process? Guys, you follow your plan. You created that plan for a reason. You understand? All right, guys, this is going to end the video. I know this is a short one today. I wanted to do a recap on my analysis throughout the whole day. I hope you guys enjoyed this. Make sure you guys comment, like, turn on your post notifications, subscribe, and make sure you guys join the streams on TikTok. If you guys would like to find my Twitter account, or if you guys would like to be mentored by me one-on-one and join the Discord, get all the signals, and trade live with us, and much, much more, you guys can find the link to that in the link in my description. But that's going to be it for all, guys. I hope you guys enjoyed. Have a good one.